Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January the 6th, 2026. And before we get started, I want to wish everyone a happy new year of 2026. May you have an abundance of health, wealth, and happiness. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview is wave one is done up here. And we're looking for a little correction down in a wave two. And then we're going to go breaking back out. The question is, where do we stop wave two? Do we stop here and start breaking out to new highs? Or do we continue to break down lower, then we go breaking out? So I made statements many times along the way. I thought initially when this first top and reversal we called well over 3 years ago, that we were likely going to see a deep retracement. So far, we made it to a 38.2 and a little lower. 50% is right around that 92%, 92.60. Then a 618's down here around 87. Typically, when you look at a super cycle, which I believe this is playing out, you typically get a deeper retracement. So, are we going to get to 80? Or are we going to stop at this 95 area? Or are we going to go lower? We shall see. But we did say it over here a few months back that this was likely not going to be the swing point low yet. We went up, made a lower high, made a lower low. Again, not by much, but it still made a lower low. Then recently, this price action going back up is overlapping chopping. So it really states we're going to make another swing point low. And then we rinse and repeat. We get a new low over here. We start bouncing. Well, is that the end of two? And we keep going stair-stepping lower. We shall see. But the plan is, I highly anticipate we're going to make a new swing point low than the current one here. Let's jump into the charting platform and look at the dollar index, and we can see what we're talking about. From that swing point low, we had all this overlapping, chopping action. It looks stair-stepping, of course, but the overlap is the problem. Where you make that initial move up, you pull back, that's fine. You go up again, that's okay too. But when you come back to overlap that same area, we went up, pull back, overlapped, overlapped. Did it one more time, pull back, overlapped. So as we kept looking at that, we said the same thing, kind of double topped here. Then we started to break back down. Last year, we talked about this 98.5 being an important area. We finally broke below that. We kind of retested it. We went lower. Now we're testing and getting rejected in the same zone. Even though we're kind of bouncing a little bit today, this shows we're below the Magic Fibo. That's bearish. All this prior overlapping price action typically means it's corrective. Corrective against what? The bigger downtrend at the moment. So this is why I don't believe this bounce is going to manifest into breaking out. What we would need to see, we discussed this in great detail many times last year, We would need to see this break above the Magic Fibo, obviously break that prior swing point battle zone up here. We tested it multiple times and were unsuccessful. So we'd need to break above the Magic Fibo, break that prior high, come up somewhere into the 101, maybe 102 area, pull back to retest, to then warrant something much bigger. Right? So far, so good. So be careful. Be extremely careful on this, because I suspect we're going to see that this rally is going to fizzle and we're going to go lower. So be extremely careful on this bounce, because I think we have major resistance in this zone of the prior battle zone over here, which was former resistance. And then it temporarily went to a little support. Then it went back to resistance after breaking down. So this is a very strong resistance area right in this area right here, from the Magic Fibo down to where price has been monitoring the last couple of days, where we popped in here, we pulled back, we kind of did it over here the last time on the way down. So this is very strong resistance here. So let's make that pink for resistance, and be careful. So do we think this is going to break down further? Yeah, I still believe very strongly we're going to make new swing point lows. Amen? Still think so. Even though right now, from this low to that high, we did test that 618 level right there. See it? So from the prior swing point low, 96.24, up to this high, this pullback went right to that 618 level. So we didn't officially break below that yet. But as we've been discussing, you start using a swing point low, we went to the extension. Moved it to this one, went to the swing point low, reached the extension. And these extensions, which were still high probability, we're going to make another lower high, lower low, that as we get below this level, that is below that 618. So once we officially, Emil, get below that 97.80 area, which again, we've tested, but we didn't break it, kind of dipped below, candle body closed above it. So this is just typical. We could bounce off of that, get another resistance, push lower. But once we officially close below that 97.80 area, candle body, not a wick, then we have a 75% chance we're going down to 95.60. 70 plus, we go down about 95. And that means a new, yet again, swing point low. So the last time we didn't make a swing point low by much, but it still was a new low. So again, highly anticipate we're going to eventually break down and make the new swing point lows. Fair enough? So this is why I'm leery of this little rally. Be careful that it should fizzle manizzle like the last time we did this. We kind of fizzled, and I expect more of the same. Swing and just kind of stair step its way lower and lower. Fair enough? All righty. What have we been looking at? In relation to wherever the dollar's headed, we get a good insight to other asset classes. Least but most important, of course, would be the euro dollar. And yes, the euro is giving us a little pullback. The dollar's bouncing a little bit. The euro's pulling back. But we got our entry down here. We made some pips, got pipped out, got back in. We're in a position of authority. Still looking for this stair step to continue. How much lower do we go? Sometimes you come back and retest the Magic Fibo to bounce off of that yet again. Like we did here, we broke out, retest, went on a bigger hike, went up to those extensions. This is not out of the question when you see this type of move from our recent swing point high to swing point low. We broke the 618 up here, right there, and we went where? To our 1448, 1272. We reached those targets. Now we're pulling back. This is sometimes typical. And typically, where do you go? from the initial move and the pullback, then the breakout, we kind of broke just slightly higher, retested the same zone from the prior swing point, pull back here to the second time, pull back, then we went up, went to those extensions. So typically you do come back down and retest that breakout to bounce and go higher again. So I'm really not looking for the euro to go tumbling much lower, nor am I looking for the dollar index to go much higher. But I still think already, based on the bigger move from that prior swing point high to this swing point low, we officially took out that 618 right there. You can see the green candle bodies up here, not just the little wick that was a head fake and pull back, but the candle body. Let me move my deals here. But you can see from that swing point high to the swing point low, we officially grinded up with that big green candle right there. We closed above that 618, which tells us we have a 75% chance we're going to continue this stair step higher towards 1980, 70 plus, towards 120 up there. It's just a matter of time. Does it mean it has to go there? Is it a guarantee it's going up there? No, no guarantees, right? No guarantees, but the probability is very high. 75% likely we go that direction, then compared to 25% we go that direction. And I don't mean just dip a little bit, I mean just break down and start breaking some new lows. Fair enough? So the plan is to keep buying the dips, let that trend continue to push and push up several hundred more pips into that 119, 120 area. But this is typical when you start to reach those extensions, you get a pullback, retest, and this part of what probably is playing out is this initial move up, and we got a little three-wave correction unfolding, and then we're likely to resume the trend headed higher. Fair enough? And the pound dollar is a ditto. Pound is doing the same. We kind of got our entry down here when we set the daily PAI hook to buy that daily swing. And then we got in, got pipped out, got back in, up hundreds of pips. We went toward our extensions. So no surprise that we bog down once we get to these targets. That's why when we use this trading strategy, you typically want to take some profits when you start reaching these levels. Amen? And sure, I do think we're going to make another higher low. Does it mean we can't go below this little swing point here? Sure we could. Now that we broke above from below, we kind of tested it initially, went up higher. It's possible we could come back to the Magic Fibo and retest that again, starting to slope upwards after this big run up. We kind of, during that run down, we were in an uptrend, and we started to flatten out a little bit, talking about the Magic Fibo. And since this latest move up, we're starting to slope upwards again. So is it possible we could kind of just drift a little lower to bounce off of there one more time? Sure. But the same rule is the same rule. We reached the initial extensions, but the same bigger picture has already been manifest here from that swing point high to this swing point low, right? That high to this low, price action is already closed above our magical 618 level. So what does that tell us? At that juncture on this candle the other day, we have a 75% chance we're going to 139, 70+% chance we're basically going to 140. So yeah, we're going to stair step our way up there. Nobody said that once you break the 618, you go directly up there. It can typically take weeks or even sometimes months to get up to these extensions up here. But it does give you a high probability that you're going to get more pips coming your way in the neighborhood of about 400 plus pips to this target, 500 or so to get to that target. And we're up a few hundred pips already. So go over to the software and we can see based on the euro dollar, we're up 100 plus pips. Yes, we're in a position of authority. Like I said earlier, we got that entry, went up, got pipped out, got back in, and now we're getting the daily turning back over after slingshotting higher. Now we're turning over, give it a little bit more of a pullback. That's typical. Like I said, we reach those extensions, you get a little pullback. I'm expecting more of the same. Worst case scenario, which I don't think is going to happen, where the daily cycles all the way down. Worst case, I can get pipped out again, but I don't think so. I think this is going to slingshot back up. Sometimes you get little slingshot, sometimes you get bigger slingshot, sometimes you get big slingshots. Got it? So I do think we're going to find support and we're going to go bouncing and break out. That's the plan. Based on the prior high to low, we still got extensions further up we just discussed. So I do think this stair step will continue further to the upside. Amen. And then the pound dollar, same thing, up a few hundred pips, 300 plus. Same thing, we're engaging, disengaging. We go up here and slingshot, and we're just grinding higher. Still in a position of authority, so worst case scenario, this thing could go plummeting lower, pip us out for profit, like we always do. And I'm still looking for my first take profit up here, further up the food chain, which again is based on our extensions. Everybody good? So in closing, I think the dollar, even though it's showing a little life today and bouncing a little bit, I don't think it's going anywhere. We're below the Magic Fibo. We have all this overlapping price action we've been discussing, right? All this overlap. What do we mean by overlap? This and that. Push up again, this and that. Push up again, this and that. And then we broke down. So it's typical once you break down, you try to rally back toward this resistance zone just to confirm, okay, now let me see something. We broke below the Magic Fibo, we tested it. We broke down again, went a little higher, we started breaking down. So let me make sure, and you can see on this one, the daily Magic Fibo is sloping downward. Let me make sure you're still resistance and get rejected again. So I would not be in a position to go extremely long the dollar expecting it to go break out. I think this bounce will fizzle and it'll break back down. And I think we're going to find resistance, very strong resistance here. Only way I change my tune, you go to that bigger picture on the dollar, is for us to go to considerably higher, to shift the gears to say, well, yeah, we expect this thing is going to go way higher and break out. That's the eventual plan where we go on and make new highs. But off this recent swing point here to this low, we got to get above 104 up here before we even start entertaining something higher. And we're below the Magic Fibo. That is very bearish, right? And this isn't the 114.72 target. This is just that recent pullback from 3 years ago. I don't know if I can get it all. Yeah, we can get it in there. This is from 3 years ago. We got the pullback. We grinded for a while, made a lower high, then we made a lower low. So just like we did here, we had some pretty good movement down. Then it took a while for this correction to play out. Then we proceeded with another big push lower. And it's taking a while since that swing point low. So that's why I'm looking for another lower high, lower low, and a continuation. Just like we did over here, we're doing the same thing on a little bit smaller scale, but the end result is the same. Amen? So when you look at the bigger picture, we're still in what is a downward trend correction, right? Push, correct, push, correct, push. So I don't think this is over yet. And again, when you start drilling down and you look at that very closely, all this particular price action says something. Is it possible this could be the end? And this baby goes breaking out to new highs above that 114.72 and above. That is the plan eventually, but based on this low, this price action is not very bullish because of all that overlap. And this correction back down, bouncing off the 618 initially, that's fine. But even when you start looking at that from the recent high to the low, we're not above the 618 in the opposite direction. So we have a high here down to a low there. And you can see where that 618 is way up here. It's above the Magic Fibo. So Emil, before we could take this dollar bounce here the last few days, before we can take that seriously, we got to do what? We got to get above that 99 area up here, basically above the Magic Fibo. We start getting above that, then because you can see where that was the wrong 618 right there, that one, right there. So we got to get above the Magic Fibo before we start entertaining. We're going to visit 100, maybe 101. Amen? That's a long way to go. And that's a lot of resistance to break through. And last time we tried that, we got big rejection yesterday off of that. And we weren't even into the area of really strong resistance. So not only do we have resistance here, but you can drag that all the way up here to that 786 zone. So now let's look at the job this dollar index is going to have to do on this bounce to manifest anything higher. Amen? So this is why I'm telling you, be careful. I don't think this is ready to do that. I think it's more in tune to lower high, lower low than this is to go ripping and breaking out. Fair enough? And the same in inverse of the euro and the pound, like we showed you, we were up on those in positions of authority. So the same thing here. We got an awful lot of support down here. We're above the Magic Fibo. That's bullish. And from the recent low to high, let me take some of these lines off because we have so many, but you can clean your picture up. This is why we keep doing this, talking about all those extensions up there. But looking at this from the recent low up to the current high, we have to come down into this area below 116 and break below, actually it's right there, this green line there, below 116 and break below 115.40. Basically, it's the exact same thing as the dollar index, but in inverse, right? We're in a big green box here from this bigger picture. So let me remove some of that. That's just from that bigger view, but I'll just remove it so we can see what we're looking at. And now zoom in on this. So in order for the euro to break down and start to say, uh-oh, Mr. Tucson, we got a problem. We're going to go making some new lows on this. We have to break this battle zone right here. So I'm going to bring this down in the area current price action. And you can see where that 618.786 zone is, which is right there, which is basically below the Magic Fibo. See it? Below the Magic Fibo. So the only reason I would take this seriously is if this rally peters out and we break below the Magic Fibo, then yeah, then we start looking for a new low around 114.20, 113.80. Got it? And even when we get down there, let's just say, what if, William Bruce? What if this actually does break down? Well, we have this dark zone here, which is even stronger support, right? This big dark zone here is even stronger support from the prior move up correction. So we'd have to break below the magic Fibo to set the tone. We're going a little bit lower than the swing point. But then we got this massive support between, say, 113.50 and 112.50 area, which is the bigger picture move. See it? And that's where we prior broke out. From this low, we broke out and above. And this is where our prior breakout comes into play. So this is extremely strong. So this is why I say, in my humble opinion, that we're going to keep grinding higher toward that 119.80, 120 is a much higher probability turnout or direction that this stair step is continuing to go up here is much higher than this breaking down and breaking back down. Got it? Even if we were to do this, still think we're more likely going there than back down toward these lows here. Amen? All righty. And then ditto for the pound, that before we start breaking down, we have a big support zone down here, but the pound on this latest run up, we got a long way to go. And that latest run up would be the swing point low up to the current swing point high. And look where that 618786 zone is. From this low to that high, that 618786 zone is right there. Way down in here. So not only will we have to break this initial one Magic Fibo area, but we would have to break this 618 down here and a 786. So we could put a big, massive one, even more important down here. And we could make this dark green just for aesthetics. I like the way it looks. Let's make that a much darker green to show you that, okay, if we're truly going to start retracing, we don't even start thinking about it until we break this support zone. And then the bigger one from the swing point low to the high is this darker one. If we break this area, we start breaking below 131, 130. See that 786 right there? We start breaking below that, then we can say, yeah, we can target 129.35, 128.60. But that's a far cry from where we are. A lot of pips before that happened, and I don't see it. I see this continuing to grind, and more importantly, I'm not worried about these lows because we know we're telling you we're thinking lower. We're already telling you from the swing point high to low, we took out the 618, that candle right there, and then another one here. We're just coming back retesting that zone right now. But we already took that out, so 75% chance we go into 139, 70 plus we go into 140. So keep buying the dips. Euro yen, starting to feel a little pressure, topping out. Kind of talked about this the last few weeks, that we're at extreme conditions on the euro yen, the pound yen. The monthly's overbought, the weekly's overbought, the daily's overbought. That yes, this could grind a little more and may not be the very top in reversal, but it is a coming. Should be coming around the mountain when she comes, right? Right around here. Is this the beginning or is this a little correction and we're ready to go a little higher? But I don't make a habit out of going long when I look at a monthly at extremes, a weekly at extremes, and a daily at extremes. I don't make a common point to go long during that period. I look for opportunities to go short, right, as they start to line up. So over at the software, not only are we up hundreds of pips on this, But the euro yen and the pound yen, they're at extremes. So this is why I'm looking for opportunities for this to go. I have it on this one. Yep, getting ready. And I think it warrants, I've been looking for that. So I'm going to go ahead and go short. Let me check my settings on this. Properties. That's good enough to get it started. So let's go back in here and click to sell. Get the party started. So we're at extremes again, monthly, weekly, daily. Already starting. So I'm looking to get to a position of authority, and then I'm going to let it start to take some profits. When I get to my position of authority, I'll go to break even +1, or even take profit 1. But that's the plan when you're at these extremes. Fair enough? And the pound yen, same type of thing. We got the daily at extremes. We got the weekly at extremes. And we have a monthly at extremes. So, Mr. Toussaint, this one's still kind of up, where the euro yen is starting to flatten out on the monthly. Go back over here, go back to the monthly. This monthly's flattening out a little bit, where the pound yen is still actually up a little bit, but they're both getting ready to top and at least give us a hardy correction, if not a true trend reversal. But that's what I'm looking for on these higher time frames, monthly at extremes, weekly, etc. So I'm going to go ahead and do this one as well. Into the new year, looking for some sort of correction, and that looks close enough for now. So you get in here and you go click to sell, and we'll start off with the same type of thing. And I'll go to the weekly, kind of sit there, see a little bit of that action. But this is why I'm not interested in buying the pound yen to go long, buying the euro yen to go long, when monthly, weeklies, and dailies are all at extremes. Fair enough? And get to your position of authority. Then once you're in a position of authority, it doesn't matter if it then bounces to pip you out for profit, that's fine. But I do think we're due, based on this scenario, we need to start turning over. And do we do the same thing? Do we pull back to go higher, or do we break down even further? Well, I think you know my feelings on this, especially the pound yen. We've discussed this ad nauseum, that go back to COVID, when we were way down in here, I made a bold statement that based on a monthly oversold, weekly oversold, daily oversold price action, we're due to go up thousands and thousands of pips over the next several years, which would include breaking this prior swing point high. So we had this price movement after the crash. That was what? 2007 going into 2010, the 2009 financial crisis, finally bottomed more into 2011. We did this big run up. We did another pullback, got the low, got the high, got the higher low. All this price action, when I saw that, says we're due to make a run back here and likely make a new high. I don't mean high above this, because you keep looking at this pound yen. There's some lofty pound highs up there at some point back in the history, way back in the 80s and 90s, etc., was much higher. But we talked about this. This is in the archives. And thousands and thousands and thousands of pips later, we ran into what after we broke out? Now we come back to current price action. This was back in last August for the big carry trade unwind. this thing dropped 2,700 pips in a very short period. And this is part of that bullish run. You get some ebb and flow in here, corrective action, but that was the plan. Then after this big impulsive move lower, what preceded that? Overlapping, 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 overlapping. And then we finally started breaking out, but this still screams, in my humble opinion, our simple big correction minimum, that all of that is an A wave. All this chopping and overlapping is the B wave. And we're due to come back down in a C wave, which might even turn into something much more drastic if we go into the Elizabeth, I'm coming to join you, honey scenario. So put your battle armor on, Emil. This isn't, well, I'm just going to sell the pound yen and then instantly I'm going to be up a couple of 2,000 or so pips by another couple of weeks like it did last time. No, it took forever to climb up there. And yes, we could rapidly get, if we get a market crash, then I could think it comes much faster, like we did here with that carry trade unwind. But I do think, technically speaking, we're due for a bigger correction no matter what. Amen? And go back to the bigger picture. And what does the pound yen historically have in common when the market starts showing weakness? Dot-com bubble burst going into 2000, 1999, 2000. As we were going into dot-com bubble burst, what happened? Kerplunky went down over 9,000 pips. Rallied back into the next big financial crisis, which was the real estate bubble burst in the 2007. Broke down, and beyond 2009, our market started to reverse here. Talking about the Dow, NASDAQ, Russell, etc., started to reverse here, but this one kind of rallied and even broke even lower before it started to recover, right? So what do we know? Financial crisis, you tend to risk on, risk off. If you're running for the hills and the markets are plummeting, the yen typically strengthens as a safe haven, and these other pairs go against, which would be the yen strengthens and goes down. So what are we anticipating that's looming? Do we get the Elizabeth, I'm coming to join you, honey? I do think our markets probably going to break all-time highs again. I'm still looking for that blow off top. But if we do get that financial crisis, what could it be? Fiat currency failure? Could be the $5 trillion plus in commercial real estate bubble that bursts. Could be a variety of catalysts that could cause the next financial crisis. 38 trillion in debt and counting, that could certainly do it. We got a lot of issues here. Credit card debt at 1.3 or 1.4 trillion, highest in history. And what do the credit card companies do? They charge 30%, 36%. Man, it's insane what they're doing. And they wonder why people go bankrupt and can't pay their bills when times are tough. A lot of families are living on credit cards, and they're doing it just to make ends meet, buy food and stuff, not extravagant purchases. Just basic household goods. Not a situation that says we're ready to just go blasting off into oblivion and the markets are going to continue to go higher. Doesn't work that way. So what's going to be the call? I don't know. But it's going to be called Elizabeth, I'm coming to join you, honey. And when it does, this pair here typically plummets, right? So we did 13,000 in the 2007 financial crisis. What are we going to do in the next one? We shall see. But whenever I get monthlies, weeklies, dailies lining up, you get moves down. You get monthlies, weeklies, daily oversold, you get bounces. Whether they're bounces of significance and then even come back lower, doesn't matter. You mean I could care less whether this thing goes down several hundred pips, several thousand pips. Once I'm in a position of authority, I continue to let it go. But even if it then bounces and turns around and says, well, no, this is just off of this big run up, that's another correction to give us a little ABC. And then we go further up, possible. And we could probably go up here to 250 eventually. Market's conditions are right. But what's getting ripe is for the next financial crisis more so than a continuation of the markets just obliviously going to the moon. I digress, but you get the point. But all of this price action, again, coming into current price action, this definitely looks more like a first leg down, corrective. We call that an expanded flat correction because we actually went on to make a new high and likely need to come back down into the area of this first move down. So somewhere around that 185, 180, that's still thousands of pips lower. And I'm not trying to tell you, I guarantee you're going to make thousands in pips, a few thousand pips to get down, that this is a guarantee. There are no guarantees, but I don't go long and make a long stretch saying I'm going long because we're breaking out when a monthly's overbought, a weekly's overbought, and a daily's overbought. And this technical picture supports the software stating we need a pullback regardless. Amen? All righty. Let's continue. What about our markets? Are we going to get the all-time breakout here and go on to push toward that 7,000? Or we're going to continue to give a bigger correction? Be careful where we are, right? We did get this Santa Claus. We kind of got this going into the holiday. I talked about low liquidity grind. When there's low liquidity and markets are semi-open and most heavy-duty traders are on vacation for the holidays, etc., you get that low liquidity grind higher. Then we got the pullback I kind of warned about. Expect the chop going into this low liquidity to start after a nice little rally. Now it looks like we're trying to bounce, but we still got to take that swing point out. Yes, I do think we're going to get a blow off top. I do not think this is the end of the run and we're kerplunky and here comes Elizabeth, I'm coming to join you, honey, yet. I do think we're going to get more upside, but this is also kind of screaming we might need a further push lower. So you stretch this out, Harold. Happy holidays and happy new year to you. And we're kind of testing that 618 zone. I can just look at it from that prior high down to the low. We're testing that 618. Yesterday we poked above, did not close. Today we poked higher above and we're barely sitting above it at the moment. So could we go on to 7,000? I think we're definitely going to go to 7,000, right, on ES. I think we're going to make a new blow off top at some point. The question is, are we going to get a correction first, come lower before we do it, or are we just going to go blasting off and get it now? We shall see. But be careful that this looks like yesterday, a little indecision. We're sitting right around that 786, 618 zone of resistance. The prior low to high, we held the 618, bounced. So there's your targets, 7,720 area, 721, kind of confluence of events, maybe as high as 760, 7,060 up there. But we could easily be that this is also, after this run up, we get a little three-wave correction. Then we get there. Fair enough? So ES and SPY, cash index, the derivative cash index, it's looking at that, but SPX is the cash index of that. And notice, big upside down hammer again, like yesterday, And this is not very conducive of, yeah, we're definitely going breaking out. Even though in my humble opinion, Harold, we're definitely going to go up and push the higher limits up here, but we're struggling. So it may need that another correction. And if we don't hold the support zone, which you can see my green box, then we're going to need a new swing point low below that swing point there. Amen? So be careful. I'm leaning more toward probably fizzling than I am breaking out, even though I'm extremely positive we're going to get a blow off top. The question is, do we do it now or do we fizzle and come back down? Because this could be the beginning of a little ABC, get support in this area, right? So what does this look like? Nice run up, a little correction. Then we continue with the blow off top. So we got some very important levels to watch as you drill down to say the 1 hour. Our 1 hour held off the initial bounce. Our 30-minute, we broke below, but we're now back above. 15, we broke below, we're now back above. If we start breaking back below, say 6,900, kind of sets the tone, we're going to start coming back toward these lows. So I'd be careful with this, that more than likely, the markets probably need this push lower first before we go breaking out. Amen? And when you look at the two, and I'll go up to like an hour so we can see this, that this is starting to look a little corrective. This kind of looks like a little 1, 2, 3, 4, 5, little 3 wave back up, and then one more push lower. So what's the level to watch? This zone right here. See my 6,900, 68.98, basically 6,900. That little zone right there. This was a fire high. We broke above it. We broke back below. Now we're back above. So if this starts breaking down and we start closing below 69 is kind of my roundabout number, 69, 68, 98, etc. Start breaking back below this fire breakout system, then it says we're likely going to come down toward the Magic Fibo and likely going to make a new swing point low. All right. So if we break 6,900 and we close below it, I mean a candle body, not a wick. If ES, SPX, or ES, numbers are a little bit different because of the premium involved, but 69.56 versus 69.16, say it, about 40-point difference. That if we break below 6,900 on this SPX, we're very much so going to make a move towards 6,800. Got it? There's your 6,800. So that's pretty much 100 points right there. So set an alert. We break below 6,900 and we close below, not just a little wick below, but the candle body on a daily chart. So let me go back to the daily, just so I can reference. I'm looking at a daily chart closure, not a 1 hour closure. But the daily candle body closes below 6,900, which is not far from this. Then we start to look for likely going down to 6,800. All right. Any questions? So right now, if you look at this from the bigger picture, we still have lower highs. Let me get my arrow going. We still have lower highs. And until we break above that, then we can start focusing on some numbers above. And what would that look like, Emil? You know what's coming. Get this out of the way over here. And we look at the 2-point tool from the recent swing point high to the swing point low. kind of testing that 618786 zone, but yesterday we got rejected. Today, so far, we're getting rejected. So we can't clear this hurdle. And we break 6,900. I think we're coming down here to 6,800 zone. But if not, and this baby does close above, say, 69.30 to 69.40, then we start focusing on 69.60, 69.70, and even 7,000. So we're going to go higher, or we're going to fizzle and go lower. I'm not convinced on this recent price action that we're definitely going higher just yet, even though, again, I'm going to say we will get a blow off top, in my humble opinion, but we could get a bigger correction first before that blow off top. Fair enough? All right, and SPX and ES kind of look similar right now. High, low, lower highs, right? So we're still got the lower high scenario. So it doesn't matter what you're trading. Be careful that we could see a bigger pullback until we start breaking above that lower high scenario. Then we can start focusing on the 7,000, maybe 760 up here. Otherwise, we start breaking back below. This one is a little bit less than 6,900. This is more like about 68.50 area. We break below 68.50, which is about 100 points from where we are. Then it says we're likely going to come down about 67 area. You got to look at each chart individually, depending on how you're trading it. But with the lower highs right now, that's not conducive to breakout to the blow off bubble up here, which we still expect will come to visit. But we may need that correction first. And if we, on this one, from that low to this high, we take that out, then where's the targets? They're already on the chart, right? From the prior low up to the high, we take out the support zone, which last time we dipped into it to bounce, but we're still at a lower high, Emil. This is not good for real bullishness. I like this and I like that, but I'm not really thrilled about that. So if we can't break above this trend line to go hunting for the blow off bubble top, and we start breaking back down, we take out that swing point low, then it sets the tone. 75%, we're going to 67. I like it. So SPX basically is around that 6880 to 6900 level. We take that out, then we're likely going down to 6800. And the same thing with here. If we take that out, then we're likely going where? 67, 6680 area, maybe 6660. So the writing's on the wall. I'm just not convinced we're ready to go that blow off bubble top just yet. Amen? Till price proves it. So what gives me the warm and fuzzy that we're ready to do that? That would be we break above that swing point. Amen? We break that trend line. Otherwise, we start to break below that 68 and change, sets the tone, we're going to 67. We don't hold that. We get a much bigger correction back toward the Magic Fibo down here. All right? All righty. If for some reason we can break above that, then you got your targets, 69.60, 69.76. But I'm leaning more toward break lower down at a 68 and maybe even down at a 67, 66 area. And if that doesn't hold, then we got this Magic Fibo that is obviously sloping upwards. So maybe we do the same. We kind of come down here, kind of reach these targets, grind lower, hit the Magic Fibo to then bounce to go get that blow off top. NASDAQ is even less impressive because we have a bigger series of lower highs. NASDAQ, we topped out and we've been getting lower highs, and we're still kind of grinding the lower high scenario where ES and SPX, we actually got a new high. See, this is a new high above that over here, new high. And now we're getting the lower high we just referenced. But look at NASDAQ, whether you look at the cash index, even looks more so. Look at that lower high trend line. So this is not real bullish either. So this is why I'm kind of thinking we might need that little correction down first before we can go blasting off. Otherwise, we need to get above this. We start getting above that 25.8 area, which is the swing point here. If this rally can continue and we start breaking above that zone at 25.8, then we have a beautiful push towards, and I'll show you what that looks like, 3.2, 2.2 from the recent high down to the low. We're churning right in that 618786 zone at lower highs. This is why I'm not thinking extremely bullish right now. But if we can break above that 25.8 area, close above, not just a candle wick up there, but a candle body close above that, then we can start focusing on 26.5, 26.8. But to the downside, this thing could set up, if we get a much bigger correction, use a 3-point tool on that one, and say, okay, what if this is the high, that's the low, and this is the lower high? Then it could put us down in even 23,002 area, Magic Fibo / these extensions. Well, I'm not trying to tell you, Emil, you should short the NASDAQ or the cash index or, NASDAQ futures. Let's short it because it's going way lower. But these bubbles are here for a reason. All right? They're there for a reason. That if this can't go breaking out and we maintain these lower high scenario, and then we start breaking support, we got our next targets where it's starting to push toward the Magic Fibo area. But that doesn't hold, then we got some more targets further down. Amen? Because this is not very bullish. Correction, and then this. This looks, or it's possible this could be a 1-2 and another 1-2. And this is setting up for that big blow off top. But up and until price proves otherwise, that's that swing point right there, right around that 25,850 on the futures and roughly the 25.8 on the cash index. Then we start looking for an opportunity for the blow off top. But while we're at these lower highs, not good. Bigger picture, that's not good. This looks still corrective, and it looks like we may need the A, the B, and maybe a C before we finish that. Amen? Otherwise, if that's a 1-2, 1-2, this thing ought to start catching fire and pushing up to our blow off top. So up and until we start closing above that 25,850 on the futures, then by all means, we'll start targeting 26, 26.9, maybe even 27. In the short term, would not be surprised to see a bigger correction. All right. Only one that looks more bullish, believe it or not, is this Russell. The Russell looks more bullish. Why? Because not only did we get that top in this correction, but we bounced off the Magic Fibo and we went ripping higher. And this looks like potentially the bullish move up, 3-wave correction, followed by the next leg up. And that's basically giving us a target up there of 2700, maybe 2760. Amen? And even if you take this degree when you move it down a touch. Let me move some of these out of here. We got a lot of lines on here, I know. I'm just going to remove some of these lines for now to give you the actual targets you can use from this recent high to this low. 26.30, we kind of touched it, and now we get a three-wave correction. So if we can go blasting off, then that starts to talk about 26.30, 2700. So all roads lead to 2700. Pay me now, pay me later. But again, we still got a series of lower highs, but this looks a little bit more bullish than the other one. Because based on that bounce in this three-wave correction, if we can start breaking above 2600, then I'd target 2700. Not too shabby. Fair enough? So what if you're trading IWM instead of the Russell? Well, kind of the same, but the numbers are a little bit different. 260, 265, kind of that bubble up here. But we still got to get through this resistance zone. So again, even on this one, we have a series of lower highs. We're still watching that. If we can break above it, then by all means, I think we're going to go visit that 260, 265. If not, and this isn't the rally up three-wave correction, and we're ready to go blasting off. So this one definitely looks more bullish than ES, and certainly looks way more bullish than NASDAQ. But when you start to look at is this three-wave, well, we need to get above that swing point. This little first down, correction, third wave, that's the ABC. Then this bounce needs to get above that swing point, which is this pink box. We need a daily candle body close above that. So we start closing above about 257, 258. Candle body close above that. Then by all means, we're going to start targeting 265, maybe 270. All right. If we don't and we fizzle and we take this swing point low below that 245, then we're targeting the Magic Fibo. That doesn't hold, then we'll start targeting this zone down here about 230, 220 area. So is this the bigger A, B, C correction, or is this the bounce and a continuation? Force price to prove itself. We get above 255, 256 up there, I'm going long. We get below this 245 and close below that, I'll go short. All right, check out the Dow. Kind of said we were going at that 50,000. We're still going to get there. Again, as this one looks a little bit more bullish than the others right now, because it is breaking some new highs. This is where I think we're headed. We're already starting to reach those extensions we had talked about. That once the pullback, we got it, we'd head up to 48, 49 area. There we are. Now, Emil, do we just keep going, hunting the bubble at 50,000 and higher? Or if other markets start taking a correction, this one may take a correction too before we can get up there. And least but not last, and last but not least, is our Nikkei, which is our global liquidity. And this did make a run up near the high. Looked like it was ready to go. Hey, we're going to 53, 54. Still think we're going to do that. But notice how we kind of touched up here at that same level and we're getting rejected. Maybe this is similar. That what if this, after that run up, this is part of the A, the B, and the C. Because right now, this is perfect equality of the first move down. We got A, B, C correction. May need this move lower. So watching on this global liquidity as well. All I can say is if this is the case, arrow, where we got this first move down, three-wave correction for the B. So if this was the A, and this three-wave correction is the B, and we do come down in C, which would put us down here towards this Magic Fibo, 46 to 44-ish range, kind of where we broke out over here, kind of bogged down, broke out, retested, went higher. So we start breaking below in this area up here, then we're likely going to come down and visit this. And what I can say from that is, what if we and Bruce, we do break down? Then I don't see our markets breaking out. I see as global liquidity comes down, it's going to pull our markets, ES, NASDAQ, et cetera, down. So that's why I'm not extreme. I'm cautiously optimistic we're still going to get this. Absolutely. I still think that. But we may need this first before we can reevaluate and then get up there. So watch this global liquidity. It's my barometer for global liquidity. If this gets rejected, email, and we start pushing lower, then I think it's going to pull our markets down. ES, I think it'll pull them all down. If Nikkei does that, then ES is going to follow suit. NASDAQ going to follow suit. And even the Russell can follow suit. Amen? And of course, the Dow would follow suit. So be careful. This is telling a different story. Dow's up today, yeah. Woohoo! On all-time highs again. Life is great. But global liquidity says not so fast. It didn't break new highs. It kind of tapped up there and it's getting rejected, where the Dow just plowed on through new highs. So this is kind of a global liquidity's not behind this. That probably tells us this thing will fizzle. So what am I telling you? If you're in the Dow right now and you're thinking, this is great, I'm up some big points, 200 plus for the day, and I was up like 500 from yesterday, life is wonderful. Take profits. Because I do think we're likely going to get a correction no matter what. Especially if this thing rips into the bubble, we're definitely going to get a correction. Amen? All righty. What about our black? Let's go into black gold. It's on everybody's mind. Black gold, Texas tea, the Beverly Hillbillies. Well, I'm sure you heard about Maduro in Venezuela. That country's in it's a mess. They have huge strategic reserves as far as oil, but their infrastructure is crumbling. Their ports, everything is in disarray. It's going to take probably $1 trillion of investment to go in there and fix these drilling sites and repair the docks and this, that, and the other, and all the infrastructure. So the idea that we have all that Venezuelan oil is only going to put more pressure for oil prices to go lower. So what's the play in oil, Mr. Toussaint? I still think we're going down. I think oil prices are going to dip down to 50 or lower, maybe even in the 40s. And this whole thing with Venezuela now only kind of sets the tone. We flood the markets with more oil. It's going to make prices come down, inflation go down. That's good. But oil prices are going to come down too when you have huge supply, and demand's always going to be there. But when your supply erupts more, then your price is going to come down. So we've been looking for this. Oil's been in this downtrend for quite some time. that we've been discussing it a long time. And I still think we're definitely going down to 50 or lower. And once, can we get 1 million barrels a day out of Venezuela? I mean, if they can fix all the infrastructure, start pumping it up to 5 million or even 10 million a day, oil prices are going to be cheap. Gas is going to be cheap. Inflation is going to come way down because we're going to have a lot of that. Well, the play is not so much the big refiner, the big oil companies out there. I think the play is going to be the Gulf Coast of the United States in the refining capacity, like Valero and some of those. So, Emil, definitely look into that. That if we can get this scenario fixed, the infrastructure over there in Venezuela, and we start pumping out 1 million, 2 million, 4 million, 5 million barrels a day, the companies that are going to go soaring higher are going to be the refiners, because that sweet crude, it's the dirty crude, if you will, that comes from Venezuela. All those refiners on the Gulf Coast area, their specialized is to refine that type of oil. And what do they do with it? You get diesel. One of the byproducts of that dirty oil is diesel, and diesel's at a somewhat of a limited shortage. So those companies, the big refiners down from all the way from the United States Gulf Coast, Mississippi all the way to Texas, and Louisiana's got several of them. I mean, all of those big refiners in that area are going to take all that new crude they're getting from Venezuela and start ripping higher because they're going to get a lot more diesel out of that. In the interim, they've been adapting, getting crude from Canada and this place and Saudi Arabia and everywhere else. But the crude they were built and specialized to produce is that dirty crude coming out of Venezuela. And with the embargo, all that for these years, they had to look elsewhere. Well, when that crude from Venezuela starts popping in, and all these refiners along the Gulf Coast area starts getting a hold of millions of barrels, and again, it could take a while because their infrastructure is shot. I think it's like $1 trillion investment to have to build that up before they can start pumping a lot more oil. Then they have to have the roadways and this, that, and the other, the ports built up to be able to get the oil to a tanker, and the tanker to cruise over there to the Gulf Coast and start unloading. But the man, if it happens, which it probably will, you're going to see some of those refiners like Valero and some of the others, stocks start ripping higher. Because when they get that good, dirty, I call it good and dirty, it doesn't make sense, does it? But that dirty crude coming out of Venezuela, their specialty is that type of oil to refine it. The oil we get out of the United States, we typically export to other countries that can refine that type of oil. Well, Venezuela oil is what we need for our refiners. That's what they were built for, and that's what they specialize in. So when they get a hold of that, you're going to see a lot more diesel, a lot more of the byproducts that we use. And it's a shortage right now. Diesel's pretty shortage considering, and that runs trucks, trains, and everything else out there. So that's going to be a good thing for the economy long term. But in the short term, we got a lot of mess to deal with over there and infrastructure to deal with before we can start capitalizing. And I know some people's eyes are getting big. Well, I think we could go to 5 million barrels a day. I think we could get to 10 million barrels a day. Well, if we can get to 10 million barrels a day coming out of Venezuela, all that oil is going to go directly where? Straight to the United States and their refiners, because they're the epitome of refining that type of oil. That's what we specialize in. So that would be a great thing, but it may take time. I digress with that story, but I'm looking into some of the refiners. So just Google it. Say, hey, AI, who are the biggest refiners on the Gulf Coast? Valero and Shell and a few people. I'm just trying to remember when I was driving down that way, the big refiners down in that area. But yeah, when they start getting millions of barrels, and all these places started ramping up their refining, and they started getting the byproducts, and diesel starts just ripping because diesel again is at a shortage. So when we start getting all that, that's going to help those refiners start making a lot more money, and that's going to cause their stocks to go much higher. So this isn't let's buy all those right now. It's an instant play, but if that plays out, which it looks like it's going to, it depends on how much. Do we get 1 million barrels a day? Do we get 3 million? Can we up it to 5 million? How much of an investment is it going to take to get that? If it can go anywhere 5 million to 10 million barrels, those refiner stocks ought to double and even triple. It should be substantial, in my humble opinion. So, in closing, all that additional oil should push price lower. It fits the mold. We've been talking about it for several years now, that all this chopping, overlapping price action said we need a new swing point low. We finally got it. Then recently, this chopping, overlapping price action says more of the same. We need another new low. We hadn't got the new low yet, but I do think it's coming. So I've been calling for it for months now. I'm going to still call for it. I still think crude, black gold, Texas tea is headed to $50 and lower. Amen? $50 and lower. So any rallies, Dan and others, should be thought about selling. Any big rallies should be sold. We're clearly in a downtrend right now. And we've been in a downtrend ever since that big spike and peak way up here in 2022. We've been in a downtrend, and we're still correcting off of the COVID lows to this correction. That's why this is screaming we're going into the 50 and lower target. Got it? All righty. Still looking for opportunities that when oil does get to 50-40 area, I think it's going to bounce. Because like we've been saying, you can't just drill, baby, drill forever and expect all these companies to constantly spend billions of dollars drilling and producing more oil when it's at $40 a barrel. Last time we dipped to 55, rockets went off in the Middle East and shot up to 78 from 55, big bounce. I'm expecting the same type of knee-jerk reaction. Amen? So even though I'm trying to tell you all this additional oil is going to cause this to do that, but we're still going to get a negative reversal out of that, if you will, that oil prices aren't just going to go to zero. That's not going to happen because nobody's going to be able to drill down here. Oil prices have to be somewhere in the $60s to $80 range is the sweet spot. So if we can get down to 50 or 40, the bounce is likely going to take us between that 60 to 80 range and might even let us visit up here near 100, as this would be the high, the low, a little retracement. Before then, what can happen here? Well, the oil could take a while to build that infrastructure. And when the markets hear that, well, it's going to take so much money and we're not able to get too many barrels out of what we have now, and it might take us a few more years to get to this point, that could be the dip down into the 50-40s, a pop up here. Then they finally get all that underway and they start producing, 5 million a day, 10 million a day, and then we can get another push. But I do think we're going to get that big bounce. So that's why we've been talking about it. Any rallies in the short term should be sold till we get down to 50, maybe even in the 40s. Once we're there, I'm looking to go long so I can buy some leverage product like UCO. Still expecting to get down in the 16, 15 range, more than likely, maybe even lower before we're done. All I know is when we get oil prices at $50 and lower, I'm going to consider buying UCO. Because once we get down here, I think we're going to get a nice bounce in oil prices. Everybody good? And that's in our archives up here. Back here, when oil prices hit 50 or lower, consider UCO. Amen? And we're still in this low liquidity, even though the markets are starting to come back. Next week, we don't have a whole lot on the economic news data, but we have earnings starting next week. And as we move into next week, the week after, got some FOMC talk at the end of the month, et cetera, et cetera. So this chop is not so much in low liquidity still because we're past the holiday, but we're not in full swing yet. That'll start like next week and the week after. So could this chop we talked about continue? Yeah. I even talked about it here. Expect to grind lower before reversal. And then we talked about Santa Claus rally and the liquidity grind higher, then the chop, or we're kind of right in the thick of all that, which we've discussed. And what's that got to do with oil prices? I'm just giving the big picture. So I clearly think, not that one, I clearly think this is going to go lower as oil prices go lower. And this is leverage, right, Mr. Tucson? So when it's leveraged, this thing can drop very quickly. All I know is I'm waiting for oil to hit below $50 and lower. When I get the ding, ding, ding and hint, 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 I definitely think we're going to get to 50 and lower. And once we're there, I'm going to start to buy some UCO because once we're in these low teens or even maybe below the teens, maybe we get to 11. I don't know. We'll see. All I know is when oil prices get down there, I'm looking at buying some of these for the bounce that's going to come. All right. Gold. There's gold in them there heels. Did y'all notice what I did with the slides? I figured, what's the best stock chart background ever created? Typically, we use different stock chart backgrounds for my slides. So I took a screenshot off of NinjaTrader and I put GLD in here, big uptrend. But there you go. Got your Magic Fibo in there. Got the Ichimoku Cloud. We got the software in there. So this will be our new template for this year. And I might start flipping some colors and maybe change some charts we're looking at. But gold seems everybody's talking about. So I decided to go with gold. How about that? Isn't that cool? And we did wish everybody a 2026 new year. All righty. So where does that leave us? Gold. Are we going to go breaking out, or is this little pullback retracement going to find resistance and give us a little deeper pullback? Be careful up here, right? Still think this run could continue, obviously, but we kind of warned about a correction. We got it. And now that we got still kind of looks like an A, B, C. And this could be the beginning of a 1, 2, 3, 4, 5, and we'd still get a much bigger correction. So I would be very careful about this bounce. As long as it remains at a lower high, be careful. Because this bigger picture, chopping, overlapping, grind higher, does not give me a warm and fuzzy that gold price is just going to keep going straight up. What are you talking about, guy? It's going to 5,000, 6,000, 7,000, 10,000. It's just going straight up. That's what it's going to do. Go straight up there, right? No. Be careful. So, Emil, are we going to end up with a lower high, lower low? Could be. I did not like, after this correction, this price action where it overlapped, another rally, overlap, another rally. This last little push kind of held that prior high, so that's a little something, something. But we still got to break out. And if you stretch this out, and we'll reach the extensions already, after this prior correction, we reached the extension. So this is not conducive to this thing just keep going higher. Although After we broke out, we did kind of retest that prior scenario. We're bouncing off of that until we start breaking out. Then I can look for more upside, but I'm still a little cautious of this because of the prior price action and reaching the extension. And we got the monthlies, the weeklies, and the dailies getting overbought territory after that big run. So it may need that bigger correction. Amen. And if you use the 2-point tool and our current swing point high to swing point low, we're kind of testing that 618786 zone as we speak. So until we get above 4,500, then I think we can maybe start targeting 4590, 46 area, but we still got to clear that hurdle. So this is what I mean. This bounce could be the beginning of another push lower, right? We reject from our 618786 zone up here, and we go on and make a new swing point low. And if we don't hold, then maybe even come down toward the Magic Fibo, which is obviously sloping upwards. So maybe we drift down this way to bounce before we continue. I'd be very cautious of this right now. This could be the beginning of that much bigger correction. And if this is the A, the B, expanded flat type of correction, and this turns out, Mr. Tucson, that this was the A, this overlapping, chopping, grinding, expanded flat B, so that's the A. Kind of warned you about this last year going into this. And if this is the B, what could this price action be? Maybe Harold, that's the 1, 2. We get a 3, 4, 5. And we come back into the area of wave A, and the Magic Fibo is sloping upward. We get that type of correction, intersect, that could set the tone for the big blast off. So be very cautious in the short term that this rally looks good. It's going, man. It's just it's going back rocket fuel. Not so fast. Got to get above 4,500. The zone up here, see, 44.98, basically 4,500. We close above that, then I can start focusing basically 4,600. Good $100 run. If we don't, and we start tapering back down, we take out the low at 42 down here, likely we're coming down here, and that bigger A, B, C is very much so likely playing out. Amen? So we got to kind of strap it on. We got support down here, kind of a zone, because we had a battle where we kind of rejection wick. Look at the candle bodies in this zone. Kind of rejection wick up here, pull back. Then we got this little pullback to bounce off of. But if we take that low out, Houston, we got a problem. We're probably coming down towards the Magic Fibo. Okay? All righty. Otherwise, if it's just gold rush and this continues insanity, then we get above 4,500 or candle body close above it. Then we can start targeting 4,600. Okay? All right. What about silver? Silver's continuing, kind of in the same boat. Is it going to break new highs again? Possibly. Well, I want to caution you of something. Gold's going higher, silver's going higher, and copper's going higher. When those three go higher together, it's happened 3 other times. Dot-com bubble burst, 2007 financial crisis, and I think going into COVID, obviously, which was another financial crisis of its own. And this is the 4th time. So all roads give me that eerie feeling we're going to get a market crash. Elizabeth, I'm coming to join you, honey. And having silver, gold, and copper all go up at the same time. The other times they did that together resulted into a big financial setback. Is this yet again that signal? Maybe, right? So that's why I'm warning you, be careful that we could certainly get bigger corrections, but if this sets off the Elizabeth, I'm coming to join you, honey, where gold, silver, and copper all going up, look out. All right, see there. Cobalt, copper. See that? Let's look at it on this platform anyway. Copper's breaking out, gold's breaking out, silver's breaking out. And go back in its history. When do we get a big setback? .com bubble burst. COVID, we got that. And we got this breaking out together. So be careful. Makes me question this. Gold, silver, copper, all running in the same breakout scenario. Last time .com bubble burst, look out. Crisis, crisis, crisis. Again, silver, insane. We talked about it at the beginning of last year. Silver's probably the market, the one that's going to go breaking out the most. It is overdue for a massive run. We got it. You may remember that years ago, and certainly others that have been with us from the very beginning. When silver was down in this area, even when COVID hit, I was like, man, you better get into silver because this pricing down here is insane. You'll never see that again. You better get in it. And I talked about that gold should be in the thousands of dollars and silver should be not only breaking 50, but it moved toward the hundreds of dollars. Took some time, but it's exactly what it's doing. Everybody uses silver, AI, drones, supercomputers, quantum computers, all this, everything uses silver. So, yep, but we still don't go vertical forever till we get a correction, vertical forever till we get a correction. And this one exceeds all of them so far. So I'm not trying to tell you silver won't go higher. I definitely think silver's going to go higher. We should be up in the $150, $170 range right now. And we're not, because the big players always kind of manipulated price. But this is likely to give us that pullback sooner than later, but no later than later. All I can say is we get a big pullback, I'm a huge buyer of silver, like we've been for quite some time. Amen? All righty. So is it going to be a nice pullback first before we get to these lofty levels, or is this insanity going to continue? It certainly can. Just be in a position of authority on that. Any questions? What about Mr. Tesla? Mr. Tesla. I still think Mr. Tesla is going to have a big breakout coming, but we kind of warned you about this pullback last year. It was, obviously, since we're into the first class of the new year. But that Tesla from the low to the high was likely going to come down and test this area. And that looks like a beautiful pullback. Do we get this bounce off of the pullback, or do we go yet a little bit lower to make a little bit bigger correction? But I still think moving into this next year, TLT. Yes, I will, Emil. I'll take a look at that in just a second. But Tesla, after the pullback, looking for some more upside. This would be a great place for this to hold and bounce. And I still think we're headed up here to the 550, 650 range. This is still my zone up here. Some people still very optimistic based on amount of millions of dollars into the options markets, saying Tesla's going to go up toward 800. Well, it's possible, sure, but this is still on the chart as a high probability between that 550 and 650 range. And this, I think, is just part of the corrective ebb and flow, and we're going to go higher. I still own TSLL. A lot of these bounces, take some profits, reinvest, take some profits, but I'm still looking for this to minimum get up here to the 30 to 35 range. And that's if Tesla only gets to the 550 to 650 range. If it does blow off beyond that, it starts pushing toward that 800 insanity level or more, then these 40, 50 range could come into play. Amen. So I'm not concerned about a pullback. There's just opportunity to buy a few more shares at a discounted price, because I still think we're going to get a double out of this into the 30s minimum. And that's when Tesla reaches that 550 to 650 range. I think we should be up here. And if we can blast off and start pushing toward 8, then I think we're going to start pushing the 40s, maybe even 50. All right. All righty. But this correction looks perfect. Now, what if we get the bigger market correction? Well, maybe this is Tesla after the big run up. This first move is the A. This is expanded flat B. And we still need a C coming down a little further. That's okay. It's still, as long as we hold this support zone in here around that 350-ish range, I'd love to see us stay above this 380, but as long as we stay above 350, still looks very bullish. Maybe we come down to the Magic Fibo to bounce, but I still think Tesla's going to go ripping higher. Maybe it's coming into the next earnings, coming up later in the month. Maybe that's what's the stimulus that kicks us off. I know he's got a bunch of the cyber taxis all over Austin, Texas now. So maybe that's part of the catalyst when they get feedback for how many people are using it, how well the program's going, plus the earnings. We shall see. Got it? All righty. But I'm still looking for more upside on Tesla, which means more upside on TSLL. What about Bitcoin? Don't like this price action. This we haven't broken a new low. We've been grinding and grinding. I don't like the fact that we tested these highs again and getting rejected. So do we physically start breaking out? We got a long way to go. We got to get above the Magic Fibo. Then we got to clear the hurdle around this 108 area. We get above that, then it's onward and upwards to all-time new highs again. But we're still at this lower high and below the Magic Fibo. It's bearish more than bullish. So price has to prove itself. Maybe when we get the liquidity blow off top, the market blow off top, maybe we get Bitcoin blow off top and we still achieve our targets. Great. Otherwise, if we get rejected and we break the lows, then it says likely this is crypto winter beginning, and then we're going to look for this thing to go lower. Amen? Don't like the fact that it reached these levels again to pull back. I want to see at least this from the recent low to high, that 618,786 zone to hold, because we start breaking back below this little threshold here, it sets the tone we're likely going to get a new low. Fair enough? So stretch that out, zoom that in. This is why I don't like this price action. We came right back to the area, and this looks like I was hoping it was going to be bullish, and we make a run at least toward the Magic Fibo, even better. So if we can see this type of price action, man, we kind of go up here, get a pullback, we get above the Magic Fibo, we retest it, we bounce, and we take out that 108, then by all means, it's all-time new highs. So it's not out of the question, but these swing point lows are important. This one by far is the most important, that 80 down there. Do not want to see any type of correction break below 80, because this sort of looks like top, corrective reversal, trend continuation. Do not want to see 80 break. In the interim, after this run up, it could be this just, it's a former battle zone with support over here, turn to resistance. We went down, resistance, resistance, and resistance again. That's why this run up is important. We see that low up to the high start to hold this 88, this green box down here. It's important we start to see that hold and not break new lows, talking about that low, but hold this support zone. So if we are going to get any type of sell-off, I want to see that hold, and then we got to get above the Magic Fibo. But ideal price action, break above the Magic Fibo, retest, break above, and close above 108, then it's game on for all-time new highs. All right? All right. Let's take instead of going through Ethereum and the rest, I'll do the TLT. Let's go to Ninja Trader. I believe I have it open already, don't I? If not, I'll place it on one of our charts. How about the remix? Emil, we talked about that a while. We got the correction, bounced off the Magic Fibo. Well, not quite, almost, but the cloud. And now we're breaking out again. So what are the upside targets for this? 104, 91 first, then maybe 107, kind of targeting 104. It's looking good for more upside for remix. TLT. We have a daily nearing oversold territory. We have a weekly. Still got a little ways to go on the weekly. Getting close, but money flow is not quite there. Grinding, grunting, watching that closely. Weekly, once my weekly gets oversold, I'd be more apt to look for a big bounce. Monthly, kind of engage. If we can get this to a couple of things. A, if the monthly that's engaging can disengage, low, high, disengage, then this would warrant going to a new high and a push up. Should we disengage on the monthly? Well, what do we know about the software? In order for the monthly to disengage, that weekly's got to reverse. Weekly has to reverse and start pushing up. So I haven't looked at this chart, but I kind of had that feeling looking at the monthly engaging over because the weekly's headed down. Yep. And we're getting closer. So is this getting close to the bottom reversal? Getting closer. My daily is also in oversold territory. So short term, we're probably due for that bounce. Let the daily PAI hook. The weekly starts turning. Then where we engage down from, we should make new highs and start get a push up. But there probably is a little bit more downside. Probably a little bit more downside first. And what I'm watching on the bigger picture, you go to your drawing tools, come down to Fibonacci retracements, and from the recent low up to the high, we're kind of could go just a little bit lower for that 618 zone, right? So this area over here is our support zone. Let's use, I'll just highlight it with this. Here's the support zone right there. So maybe we get just one more little push. Let the daily maybe even slingshot lower one more time, push lower, weekly finish the cycle, Then we have a monthly engaging over that could disengage when the weekly turns up, and this could give us a nice little pop in the immediate term. So short term, probably going to go a little lower. I'd like it to see go down to 86, not too much further. At 86 level, maybe just a tad bit lower, somewhere in the zone. Last time as we were stair stepping, we kind of bounced in that zone, went up. Now we're testing it again. This does look like a potential 5-wave down, so that might be the corrective move coming up, A, B, C on that bounce. But the software is telling us we do have a bounce coming. I'd like to see this daily again push a little bit lower just so the weekly can set up together. And we can get the weekly and the daily together when the PAI hooks. That would be a setup for a little bounce on TLT. All right. And based on that, we're holding a 618 off of the low to this correction. That could set the tone for some more upside. What type of targets to the upside? Well, we get above 95 up here, 95, 97 area. We could go to some extensions, so we can stretch this up. And let me move this so we can see it a little bit more. And you use your 3-point tool in here. Magic Fibo, where is it? I went too far. Drawing tools, MPA extension. And if this is the low, and we go up to the high, and we get that higher low somewhere in there, I just think just one more little dip in here. Then we could start targeting 95, 96, maybe 97. All right. So ideally, I'd love to see the weekly finish and turn, but we may not get it. You know, maybe it'll start engaging back up because of where money flow is located. But with the daily oversold, weekly getting oversold, and a monthly engage, disengage, that would say what? Low, high, higher low. If the monthly disengages, we go back to the high and make a new high, and look where your targets are. Right at the Magic Fibo. From the bottom of the Magic Fibo up to the exact top of the Magic Fibo. Isn't that interesting? See it? From the bottom of the Magic Fibo up to the top of the Magic Fibo. So my target zone, weekly turns, shoot 95, 96, 97. And this will reverse. So what is the plan here? This baby will reverse, reverse. This will go up into that price action. And on the monthly, we will see what we call engage, disengage. This will turn up, blue will turn up, money flow will turn up. And from the low to the high, you disengage. What does that mean? Highly probable. We're going to go back to the high and make a new high, which puts us right into that extension target zone, which is the daily Magic Fibo. Beautiful. Right in that target zone. All right. All righty then. So with that, actually it's up here. It's the, weekly Magic Fibo. Not the daily, it's the weekly Magic Fibo. Yeah, weekly Magic Fibo. All right. All righty. Let's finish up with our Ethereum. Get this out of here. So don't like this price action, but I'm not doom and gloom on Bitcoin. As long as we keep getting these higher lows, we want to see higher highs, not stop. So the critical level is we got to get above the Magic Fibo. We do that. We clear 108. I think at that point it's over. We're going on to new highs. and we're going to be targeting 132, 138. But that's a big if we can get above the Magic Fibo and then close above that 108 area. Then it sets the tone. Otherwise, we break any new lows below 80, that probably sets the tone that this is probably the top, and we're going into that about a year worth of 10 plus months of crypto winter. Ethereum, a little bit more bullish than Bitcoin, but I want to see it get above the Magic Fibo. And once we do that, that starts to set the tone. So what type of price action I love to see? When you break back below, kind of like we did here, kind of broke above, retest, and then we took off. Well, I'd like to see us start drifting above the Magic Fibo, come back and retest it to break out, maybe come back and do one more, and then we should blast off. But that's a big if, right? Get above the Magic Fibo, I start to feel warm and fuzzy. We get above that 4,000, I really start to feel warm and fuzzy for our 55, 6,000 to come into play. First things first, gotta get above the Magic Fibo. I still think there's opportunities that this is going to grind higher. But again, this slow bogging down in these areas is not good. Once we get above the Magic Fibo, feel much better. We clear 4,000, game on, we're going to all-time new highs. Amen? So I did purchase a little ETHA with some of the profits of the prior move, and I'm still looking for some more upside. Worst case scenario, we get a little dud, and we kind of have the high here to the low. Still think we're going to grind toward 30, maybe 32. Even if this is the doom and gloom, we'll probably still grind up this way before we're done. If it is crypto winter, if it's not crypto winter, we start breaking above 4,000, then we're going to start targeting 38, 40 range. Amen? And of course, ETHU, that's the non-leverage product. This is the leverage product, kind of just grinding down here. We definitely need to see Ethereum blast off. If we do, this thing could go on another big run. But Harold, did we peg this or not? We said when Ethereum makes a run toward 4,000, this thing would run into our 618,786 zone, which was that 160 to 197 area. Did that perfectly. So hopefully as many took profits here. Now we're down here. Yes, I still bought some more on the house's money. This started back years ago in 24, etc. When before the splitsy, this thing dipped into $4 and went up to $12, took that profit. Then we got these lows, took some profit. So this is on the house's money. So Mr. Tucson, could the shares I own here I don't think they're going to go to zero, but if this goes into crypto winter, this is going to be ugly. It's going to be ugly, as you can see. So is it over? Maybe, maybe not. Still got to get Ethereum above the Magic Fibo. This would be above the Magic Fibo. Then it could start to set the tone. Can we possibly get back up to 160, 190, or even in the 200s? Only way we'd even dream of this thing doing that again, Harold, to get up there, is Ethereum has to go ripping to that 5,000, 6,000 range. Then we got a potential chance for this thing to go ripping. First things first, these leverage products, ETFs, are based on the underlying. And until we get above the Magic Fibo and then start getting above 4,000, that's when it's going to get interesting. Because if we can do that, then it sets the tone for the 5, 6 range. And if Ethereum can do that, from where we are, just for an example, If we can go up here to that, say, 6,000 range, that would put us about 90% gain, roughly. So ETHU would be in that neighborhood of a 200% gain. So if we take this from where we are and we go up 200%, if I can grab that corner, and we go up about 200%, for example, that would put us somewhere in this area. So back toward that 198 or so. But that's why we got to go blasting off. We get to 6,000 and start pushing toward that 8,800 we talked about. Then that thing goes way up here into the 200s. Well, we're talking about this on a weekly chart, the combo meal, right? What was the combo meal? Where you get from the low to the high, a 618 retracement, a bounce off of that, which we're doing so far. Kind of stretch that out for you. We get a bounce off of this Magic Fibo, which happens to be that 618 retracement, right? Everybody see it? So from the low to the high, we got a 618 retracement, which is the Magic Fibo bounce. So when does this thing get real interesting? Again, from the recent high to low, we start getting above that 4,000, it sets the tone for the extensions. But typically, when you get a 618 retracement combined with a Magic Fibo, and this is a weekly, you tend to do a 3.2, low, high, higher low, and that puts us up toward this 8,000. Now let's just feast on that for a second. If this Magic Fibo weekly bounce manifests and we go full-blown bull into the blow-off top, and that baby starts pushing toward 8,000, where do you think our ETHU is going to be? ETHU, if that's the case, is going to be pushing the 200 to 300 range, maybe even higher, right? I would think definitely in the 200 plus range. So let's just do the math on that. ETHU, we don't stop at 6 right there. We don't stop there at the 5,000-ish range. Let me grab this right there. And we go on up to, say, 8,000. That puts us about 160%. So ETHU would be over 300%, which would definitely get us into that 270-ish, 200 plus. See it? It's already on the chart, 200 plus. So that's kind of how I anticipate if we can get above 4,000 and we get that Magic Fibo on a weekly bounce play out like it historically can and does, and we push toward 8,000, then ETHU is going to go ripping into the 200 plus area, which I like. And again, it's all on the house's money. So in closing, let's circle the wagons. What do we know? First off, dollar index. Be careful with this. We're going down. Down goes Frazier. Down goes Frazier. Down goes Frazier. This bounce is running into major resistance. We got the Magic Fibo. Everything about this price action says the dollar should go down further to make new lows. We've been counting on it. We got new lows here. We're looking for another new low. How low do we go? Still think we're going lower. Only way I get bullish on this, we got to go breaking above 107. Then it might be, maybe that wave 2 is over. But in the short term, we're below the Magic Fibo, bearish. We're bouncing off of the recent area and testing the 618 zone, bearish. lower low, here we come. 95, 94, that would be the new swing point low, minimum. Got it? So any rally should be sold. Any rally should be sold. And therefore, our euro and pound, etc., are going to continue to grind higher. So I've been saying it for weeks and months now, ever since 3 years ago. You go to the big picture on the weekly. We go out to 3 years plus ago. Talked about a major reversal down here below parity. We were going to get a multiple thousands of pip retracement. Never said we would break to new highs. I just said we were going to get a big retracement. As the dollar breaks down, the euro is going to go up. Beautiful. Even after this point in time here, talked about going long and up thousands of pips off of that bounce. And we're still looking for more. And I still think writing's on the wall coming to the targets, Harold. We've already seen price action not in its direction. So I'm going to stretch this out, bring this over. So from the recent high to the low, we closed above that 618 already, right there. And that says we're going where? 119.80, 120.30. So any dips should be bought and focus on 119.80, 120.30. We're already in a position of authority. The software is running. We're good to go on that. So we're expecting this to go further up. Pound dollar, as the dollar breaks down, the pound will continue to go higher. We're up well over 300 pips on this latest little bounce. We got in, we got pipped out, we got back in, sitting over 300 pips. Well, that's just the beginning. We got about 400 to 500 more, highest probability coming our direction. Why? From the recent high to the low, we're above the 618. We closed above it right there. And then again here. So what does that tell us? 75% we're going to 139, 70 plus we're going to 140. So any dips, in my humble opinion, should be bought, expecting the targets to come into play. The euro yen, pound yen, expecting these to start breaking down. Monthly, weekly, daily is extremely overbought, starting to turn. So looking for this to go lower. Pound yen, same thing. Extremes, looking for this to go lower. And be careful that once we get to a position of authority, this thing is likely going to give us a bigger correction. That is the plan. After the bigger move, we saw this on the higher time frame. This looks like an A. This looks like a B expanded flat. We're likely coming down. That's the plan. That's the technical picture. The monthly overbought, weekly overbought, daily overbought kind of says the same thing. But I'm warning you, like we've done before, we get in, we make a few hundred pips, we get pipped out. We get in, make a few hundred pips, we get pipped out. I'm getting back in. Get to a position of authority, then what? Let it potentially run, but get to that position of authority. So no one said trading is easy. It's not, right? You got to put your battle armor on and look forward to these battles. Continuation, we're going into markets. Still think we're likely going to get a bigger correction before the blow off top, but I'm watching price action like a hawk. We're just grinding in this zone. Are we definitely going to go bubble hunting? Yes. I think all markets going to get us a blow off top. Is it first quarter? Is it pushing us into mid 26 before we get a bigger correction? I still question this because we're at lower highs, right? From the breakout here, we're at lower highs. Let me stretch that out for you so you can see that. Even though it looks a little bullish today, hey, we're up 24 points. What are you talking about? Still high to low. We're grinding in the 618786 zone. So until we break above this prior swing point and close, then we can start targeting 7,762. But if this falters and we don't hold and we break this swing point low down here at 69, 6880 area, we break below that swing point, Harold, we're going new low, 67 minimum. And likely maybe a bigger picture is if we don't hold that zone and we break down, then we're probably going to go hunting the Magic Fibo. So I would not be shocked, honestly. We could either go bubble hunting now, sure, that's possible, or we get a bigger correction. And if 67 down here doesn't hold, then it's probably Magic Fibo before we get up there. So would I be shocked if we fizzle come down here, then we get the blow off top? No, I would not. We do not have to get a blow off top today, tomorrow, this week. Markets are just waking back up after the holiday. We got earnings coming in next week starting. So over the next several weeks, we're going to have a lot of earnings. We do have FOMC at the end of the month. We got some things that could spice this up or force this for the bigger correction before we get up there. But I clearly think we're bubble hunting. And the reason I'm not so bullish right now is because not only are we struggling in this area, but you look at its counterparts. NASDAQ did not break new highs like ES did. This fell short, and this bounce is still holding short. So until we start breaking above that swing point, then we could focus on all-time highs, but we may need one of these first before we do end up bubble hunting. But in my humble opinion, we're definitely going to bubble hunt before it's over. So is this going to go now? Maybe, but I think at a lower probability because, again, we've been getting these lower highs, and that is not real bullish price action. If this was a correction, trend continuation, it's possible this could be a 1-2, 1-2, but if it is, this thing needs to go ripping up here quickly. Otherwise, probably need that before we get up there. Fair enough? So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor, and join us again tomorrow. That's it, and that's all.